Hello, everyone. Today is April 2nd, and I am Joe Rapisarda. Thank you for tuning in to today's episode of the Rap Report. So the way that I figured was the best for me to start recording these is I'll do a weekly update. I'll get an episode out once a week, probably on Fridays or the weekends. If there's something that comes up in the middle of the week that I think is significant enough to post and get out to you, I will go ahead and record that video and launch it. I'm also going to do these recordings in the background here. This gives me the ability to edit the video where I can actually show another screen of mine and show some supporting documents and content to what I talk about. When I just record on a live Facebook feed, I'm not able to do like a share screen or anything. That doesn't really help you when I'm trying to explain certain topics or certain points. I want to be able to show you articles or charts. I'm not able to do that on Facebook Live. Therefore, I have to record these in the background, and then I can post them on Facebook and YouTube. What I'll do is I'll probably put the word out there for those that are interested. If you want me to host a Facebook Live for any reason, I can go ahead and do that. But until then, I will continue doing what I'm doing now. All right, cool. So let's get right into it. Today is April 2nd. Dave, 3 weeks now in quarantine. It's become so normalized for everyone that, we all know what's going on around the world. But let's quickly jump into it here then. So we know now that this week was this quarter, the beginning of 2020. Now that Q1 is over, we see that it was the worst quarter ever for the Dow. The Dow at one point was down 40%. I believe it had came back up and finished. You see right here, the Dow's down more than 23% year to date. So it ended Q1 down 23%. A part of that is the GDP numbers as well. So GDP meaning gross domestic product. For those that are trying to learn more about economics, gross domestic product really just represents the value of everything that the U.S. has made at one time. So all of the goods and services and all of our business practices in the United States, if you tallied up how much all of that was worth, how much we created and made, that equates to our gross domestic product. GDP is how we measure how our economy is growing or shrinking. So if our GDP number is going up, that means that the economy is growing. We're producing more goods. We're making more. We're making more goods. We're giving more services. The business of the U.S. economy is doing better. When gross domestic product falls or drops, that means that we're not producing as many goods. We're not doing as many services for people, and the business of the U.S. government is slowing down and doing worse. So GDP is also another thing that's playing into account right now. So we know now, quarter one of 2020, GDP is predicted at negative 9%. Now that is a significant drop. Typically, we do not see drops in GDP of that amount. Obviously, we know that this is due to the coronavirus, and in the background, it's really due to the banking practices that have been able to take place over the last 10 plus years since the housing crisis. I'll show you another chart coming up here on that topic. If you're wondering how I'm able to share a separate screen right now, I'll give you a little tip. I've got an iPad, and what I was able to do was set up a separate Skype account on my iPad, and I actually am able to. Right now, I'm recording a Skype call between myself, what you're seeing, and my iPad, and I'm doing a share screen on the iPad. So that's what you're seeing in front of you here. So, all right. So, first quarter GDP, negative 9%. What does that mean? That means that the first quarter of this year so far, the economy as a whole and the goods and services that we're producing has dropped by 9%. That's obvious for everyone. We've all been living through the chaos of COVID-19, so it makes sense that we would not be producing as many goods and services. Now, this becomes an issue when we start looking at quarter two. And that's because, we don't want to see another large drop, right? If we see another large drop in Q2, that means that the economy is not recovering and it's only getting worse. Goldman Sachs just came out and, they put out a news report talking about unemployment hitting 15%. quarterly GDP falling to 34% amid coronavirus. So Goldman, what they're predicting is that Q2 GDP, their estimate is at negative 34%. Which would be an incredible drop. Let's hope it doesn't get to this. But if businesses continue to be shut down and employees are continuing to be laid off because they have to self-isolate and quarantine and businesses are not profitable, the 34% decline in GDP is definitely possible. Another important thing to keep in mind is unemployment rates here. We all are aware, everyone's hurting. We understand that unemployment is starting to skyrocket. I believe, 2 weeks ago, we had the largest one-day sign-up for unemployment ever in history. 3 million Americans had filed for unemployment. We are all feeling the heat, and it's looking like that is not going to slow down as long as businesses stay shut down in the United States and around the world. Okay, so if GDP continues to decline into quarter two, that would indicate that we're officially in a recession. So for those as well that don't know, what is a recession? A recession is a term that is used in economics for a decline in one's economy. And I believe the official definition of a recession is you have to have 2 consecutive quarters of declining GDP in order to officially say that you're in a recession. So we know that right now from Q4 of 2019 to Q1 of 2020, there was a decline in GDP. We just talked about how it was negative 9% this last quarter, the quarter being January, February, March. If we continue to decline into quarter two, which we saw here, Goldman is predicting that it's going to happen, then that would indicate 2 consecutive quarters of decline in the growth in the economy, which would officially put us into a recession. I think all of the experts and everyone agrees at this point that we are in a recession now. That is without a doubt. But what we're now trying to understand and gauge is how bad is this drop going to be. I'm one that believes that we are entering into a depression, more of a depression, and then a currency crisis on top of it. I don't think. I think going forward, we're just going to continue to see downfalls in GDP, downfalls in the market, and we're not out of the bloodbath yet. I have talked to a few people offline about, the rebounds that we've seen in the market. I know 2 weeks ago, last week, we had a couple-day rally. They said it was the best rally in the stock market since 1933. But you have to add more context to that. You have to understand that. Well, first of all, let's look at it. The best rally since 1933. Well, what else was going on during 1933? The Great Depression, right? So the Great Depression was from 29, and then it extended all the way, I believe, into 1934 plus. And during the Great Depression, as you had an extreme drop in market prices, you also had these rebounds that happen. And that's why we're seeing such significant swings in the stock market. One day it's down 10%, the next day it's up 8%, the next day it's down 10%, the next day it's up 5%. This volatility usually only takes place during these large market crashes. I only bring that up because, if you're someone that's just watching CNBC or mainstream media, not independent journalists, you might be thinking that, okay, it's a good time to buy right now. But you have to keep a level head and you have to understand and look at what's going on overall in the markets, right? The news is going to tell you to buy because the news wants everyone to not completely freak out here. But remember, if no one is back to work yet and we're only a month into this thing, and people continue to stay home and not work, not be productive, not produce goods and services, how are businesses going to make money, right? How are they going to make money? And what does that mean for their stock valuation? If they're not making money, odds are that the stock is not going to do well. There's a term in finance we use called catching a falling knife. And what that means is that you think it's a good time to buy as it's plummeting and, you buy in. And what you're really doing is you're putting your hand in, you're dropping a knife, and you're catching a falling knife, meaning that the charts are still continuing to drop, but you thought that it was a good time to buy in and it wasn't. My recommendation to everyone out there is to just, continue to hold off until we actually hit a bottom here or until at least, businesses get back to work and everything. So I want to also talk about what's going on with the Federal Reserve and the balance sheet. We've all heard, and I've talked about these stimulus checks that everyone are expecting to come out at this point. What's going on is that the Federal Reserve now has started to print money again. What does that mean? Well, there's a shortage of cash, and typically during these times of recessions, the Fed will lower the interest rate, and then they create more money out of thin air, and then they give it to businesses because they're overextended on loans and they need more cash in order to operate. And historically, this has been a way to re-stimulate the economy to help bring it back out. But what we're seeing this time around is that these policies aren't working anymore. The Fed has come out with a $6 trillion bailout package. This $6 trillion, people like you and I get a very small amount of that. That is the $1,500 or $1,200 check a month that they're talking about. But in the background, the banks and the large corporations that really put us into this mess are getting the bulk of that money. Now, what does that mean, right? What does that actually mean that the Fed is printing a ton of money? I have a chart here that I'll pull up that shows you the Federal Reserve's balance sheet. And let's see if it's going to update here on the screen. Okay, great. There we go. Okay, so what this chart is, it's a chart of the Federal Reserve's balance sheet, right? So you'll see on the y-axis, it's how much money in millions of dollars. So this is in millions, so meaning really trillions, right? So you add another 3 zeros on top of that. And you'll see that up until 2007 there, that gray line, the gray vertical line you see right before 2010, what that means is that's a recession period on this chart. So you'll see that all the way through 2005 up until the middle of like 2008, the Federal Reserve really didn't have too much on their balance sheet. And then you see the massive spike just before 2010 in the gray zone. That was the housing crisis, the 2007-2008 housing crisis. That was when the Federal Reserve had actually started their first quantitative easing program of printing money and buying financial assets off of the stock market and from banks. Again, the Federal Reserve is a private bank. They're not a part of the federal government. They actually loan money to the U.S. government. This is the scam of central banking that has existed since 1913. And you'll see that spike in 2008 is where it started. And ever since, there's been a massive increase in how much they've actually had on their balance sheets of assets. And then if you go all the way over to 2020 on the far side of the chart, you'll see that it is a vertical increase above 5 trillion now. So this is important to know because this is what we're seeing happening in the background right now within the financial markets. So when you hear that the Federal Reserve is giving bailout packages, what you're really hearing is that the Federal Reserve is purchasing financial assets, meaning stocks, bonds. They're purchasing bonds off companies, negative yielding bonds. This is bad debt. And in my opinion, what I think is really happening here is that companies are going to become nationalized. So this typically isn't, normally we wouldn't see this happen in markets. So normally in the past, right, a recession happens, any businesses or banks that really overextended themselves and they weren't having good business practices, they would be allowed to fail. And they would fail. And that's the way the market works. And then others would come in their place and then, they'd start back up and then, business would go on as usual. But what we're seeing this time around is that the Federal Reserve is going to have to print so much money and they're going to have to buy so many financial assets in order to actually, try to recover this whole mess, that they're actually going to own a large percentage of those businesses on the stock market and a lot of the debt. That's what we call nationalized. So it means that the U.S. government, as a national entity, owns a lot of the businesses. This is something that we see in communism. Communist countries, let's use China for example. China is a communist country. The communist government controls all of the business that happens within it. Everything that happens within China is controlled and owned by Xi Jinping and the Communist Party. Huawei, Alibaba. All of these companies are actually owned, at least a larger percentage of them, by the Chinese communist government. Here in America, we've always had, a democratic government. We had neoliberal businesses, so this didn't happen. But now we're seeing that we are, in my belief at least, I think that what's going to end up happening is that the Fed is going to end up owning so much of this stuff that the U.S. government's actually going to own a lot of businesses. And we are moving into this nationalized kind of environment. We'll see going forward. This is a good chart, though, to show you that the Fed now owns more, has more on its balance sheet than it ever has before. And, I'm under the belief that we could see, the markets become more nationalized. What would this mean? Well, it would mean that private equity, banks, and the U.S. government would really own all of the, massive real estate companies. So if you live in a condo complex, BlackRock or private equity could really own the companies that control those condo complexes. We see the same thing within medical right now with a medical industrial complex. Private equity, BlackRock, I believe, owns a lot of rights to hospitals and to these medical centers and walk-in clinics. And that might not seem like a big deal right away, but you have to think about it. In whose best interest is this if there's a financial institution that owns all of our medicine and all of our housing complexes and everything that we do? We as Americans right now are price gouged as it is from the medical industry and from housing. Is it going to get better if banks own it? That's not a right or wrong question. That's just one that I'm bringing up for you to ask and answer yourself. All right, so let's move on to the next thing here. This is also another significant topic that happened this week. We haven't seen this happen in quite a while. So in Hungary, Hungarian parliament passes bill that gives Prime Minister Orbán unlimited powers and proclaims. So right now, the parliament passed a bill that gave the prime minister unlimited power. And what powers are there now that he has? He controls a state of emergency without time limit, so he can implement a state of emergency and doesn't have to put a time limit on it. There's a rule by decree. Parliament is suspended, so he can suspend parliament. No one can vote. He can say that there's no elections. Anyone that's spreading fake news and rumors can get up to 5 years in prison. And also leaving quarantine equates up to 8 years in prison. This is significant, folks. This is something that we haven't seen since really pre-World War II, leading into World War II. We all know that the Germans the Nazi Party obviously had a massive role in World War II. Well, what happened? How was the German government, or how was the Nazi Party allowed to actually do what they did leading up to World War II? Well, after 1929 and through the 30s, they lost World War I, and there was a Treaty of Versailles, and they were required to pay back all of the debts from the war and help rebuild. Well, what that did is it crippled the economy, and it really crippled society in Germany. Through the 30s, as society was like it is right now, people started batting heads and clashing, and they were unemployed and they were hurting. And Adolf Hitler in the Nazi Party was able to actually after I believe it was the Reichstag fire and everything, was actually able to have laws passed that stripped the people of the rights. And because of this, they were able to enact new laws without anyone voting or saying anything that led into World War II, right? So they instilled themselves as the main party of Germany. The people could not vote against anything anymore. None of the politicians could do anything anymore, and the Nazi Party ruled. This is what we're seeing right now in Hungary. This is also something that we're seeing across the world right now with a lot of right-wing nationalism. So there's a lot of populism in politics. This is significant because it's the first time that we're seeing something like this in a long time. I expect that this will continue to go forward as time goes on. Now, one of the final things I wanted to bring up today is gold. So gold, I've talked a lot about. Gold is something that I've recommended to people over the last, really 2 years leading into this, because gold is really the only form of sound money. one of the only forms of sound money. During times of recessions and depressions, people flock to gold to save their value. Why? Because what's happening right now is, we said the Federal Reserve printed $6 trillion. What that means is they added $6 trillion of US dollars to the money supply. All of that money that you see in your bank account and all that money that you see in your wallet is actually worth less today than it was before they printed. If you had held gold, you can't create more gold out of thin air. You can't create it out of clicking a button like you can dollars. You have to actually dig it out of the ground. There's only so much of it that exists on Earth. Therefore, if you had held gold during the same time period, you actually would have preserved your wealth. You wouldn't have lost money through inflation. And right now, we're noticing gold is obviously being purchased at historic levels. This chart here, you'll see that March was the highest, the largest amount of buying volume for the U.S. Mint in a significant period of time, at least the last year and a half. But what's also interesting that's happening is that we are now seeing that there is a shortage of gold, and banks and intermediaries are actually proving that they don't actually have the gold they say they have. This is a tweet from Roy Sabag. He says, the CME PR is out. Two important facts have been withheld. One, which banks were short 16 billion more physical than in CME vaults and required a bailout? Two, how will LBMA metal in London be used to settle delivery in New York during COVID shutdown? Another sad day for free markets. So what happened here? All right, so when you buy gold and you buy metals, there's two ways that you can purchase them. You can purchase them by either one, buying gold and having it sent to your house and holding it physically, or buying gold and having it kept at the bank, and they give you a receipt essentially that says, okay, yeah, you own this gold, you don't have to hold it, we have it for you, and then you can trade it, you could sell it back at any time. Well, now that the curtains are rising and the tide waters are washing out, we're learning that these banks actually don't have the gold that they said they did. These banks have done what they always do, and they either lent it out or there was business practices that they weren't accountable. So what Roy Sabag is saying here is that there was banks last week actually that had $16 billion less gold than they said they did. And that's being found out because people around the world are actually wanting their physical gold now. So they're calling the intermediaries that held their metals and they're saying, hey, mail it back to me. I want to hold it now. And now we're learning that banks are saying, we don't actually have it. This is a big deal. I've recommended purchasing metals. Right now, if you actually go to try to find metals, you're not going to be able to find it. You'll be able to find a couple websites that still have gold and silver, but they're at a larger premium right now, and that's because there's an actual physical shortage right now around the world. This is great for price increase in metals. I think that we're going to see gold and silver now increase in price. I really believe that gold you can see at a price of $5,000 an ounce in the next couple of years. Silver always trades at a certain percentage of gold's price, and right now it's undervalued. It's around $17 an ounce. Gold at silver is around $17 an ounce. If gold is able to actually make the $5,000 an ounce, which I think is possible, you'll see silver probably priced around $250 an ounce from $17 now. So there's a lot of there's a potential for a large increase in the metals markets here, but there's a drought in precious metals now. So what else can you do? How else can you play into this metals game? Well, mining stocks are good right now. I've talked about mining stocks in the past. Precious metals miners are going to become very popular now. If there's a shortage in metal around the world, and people want to buy gold and silver because that's what they do in depressions and recessions, the only way to get more of it into the market is to dig it out of the ground. That's where the miners become now valuable. So I expect that precious metal mining companies will have a large increase in funding to go and dig gold and silver out of the ground. And I think that you'll see even their stocks appreciate quite a bit. I'm not going to give any recommendation on mining stocks. I'll let you do your own investigating and research. But if that's something that interests you, I think that it's going to be a good time for the miners now. Another thing that I support and that I think will happen As I really do believe that this is going to drive more Bitcoin adoption. Up until 2009, when Bitcoin was created, during these times of recessions and depressions, precious metals were really the only thing that people had the ability to buy into to preserve their wealth. Well, now we have Bitcoin, we have digital gold, another form of sound, true money. 21 million Bitcoin will ever exist in total. You can break one Bitcoin down to 100 million decimal places. So what that means is if you have, you look at one Bitcoin, you can actually break it down 100 million decimal places down as a fraction from there. So this currency can be split up quite a bit. It's a currency that was made to last until the year 2140. And I think that it's not, I think that it's a logical thought to say that once hedge funds and pension funds and individuals realize that they can't buy physical gold anymore to save their wealth during a depression because there's no more of it and we have to go dig more out of the ground, I think that those people are going to start buying Bitcoin. I really do. We know that the New York Stock Exchange has a company called ICE. ICE is the company that owns the New York Stock Exchange. They actually just launched a Bitcoin platform called Bakkt, BAKKT. The New York Stock Exchange has a company called Bakkt that trades Bitcoin. They're working with pension funds right now and large banks and businesses to have exposure to Bitcoin. I've definitely supported Bitcoin during these times because while your money is while your dollars are going to continue to be inflated away, at least if you hold a small percentage of it in Bitcoin, there's only so much Bitcoin that can be created. You can't inflate it away. And just like how Bitcoin has saved people in Greece and in Turkey and in Venezuela and in other countries during their economic crises, I think that in the United States, the rooster's going to come calling and Americans are going to finally realize how important Bitcoin is as a technology to help preserve their wealth. That's pretty much it for today, guys. I will leave you with a brightness, though, something, to cheer everyone up. I really do think that this event that's happening is actually going to bring back production to the United States. It's going to bring back a lot of companies to the U.S. We're finally realizing now through a pandemic how important it is to have companies here on American soil producing physical goods and services that we need. For example, ventilators, masks, medications. We've realized that we've relied on other countries, including China, in other areas to make those for us. At the beginning of this pandemic, the ventilator and face mask issue and medication issue was such a big deal because it's all made in China. If it's all made in China, we don't have any here for ourselves. So I really do think that we're going to see, companies come back to the U.S. I think that we're going to have more production that's going to happen here in America. And that is a bright side to look at because once we get through these hard parts with the economy, I do think that what the economy that's going to come out of what we have now is actually going to be better off for us millennials. It's going to be better off for the Gen Zers. And I really do think we're going to have a much brighter future after this. Thank you again, everyone, for tuning in. If you like what you hear, definitely share it. I appreciate you guys kind of putting up with me here. I've just been trying to record as much of what I've been studying for the last 2 years now while we're going through this event to help you, but this is more to document what was going on in this current time in history. I intend to use these recordings and all the recordings that I've done at the Rap Report, also the Nonconformist, and my new Bitcoin adoption page called Adoption. Years from now, I plan to compile all this information and then maybe publish some type of research or book looking back in time on what was going on during the Great Depression of 2020. So that's really it for today. Keep loving, keep living, and I'll talk to everyone soon. Bye, y'all.